Yeah, okay, mate. Let's look at Sol here. You're asking, will Sol break through the trend line? Are you talking about the horizontal trend line or this downward sloping trend line? Anyway, let's look. I did post quickly earlier. I just having a busy morning. From next week on, I'll be fully on the charts. I've just been helping my missus with a few things, but we're nearly finished. I did post it had already flipped red on the 9-week and the 2-week. So let's have a look at it. It is, I think it is actually bouncing again a little bit. Yeah, so it's trying to bounce a little bit. Very choppy, very small, and this is a 2-week chart, by the way. This is a bearish candle. It's actually it's not a bearish outside candle because it didn't take out the highs here. It's not a bearish outside candle, but it's still classified as like a bearish engulfing candle that closed below. So what that kind of often means is you got to be careful in bounces, because bounces could then go lower when you get such a bad candle. Actually, just a little bit like this. This was actually, this big red one here was a bearish outside candle. It took out the highs of the previous candle, and it took out the lows of the previous candle. So that was a bearish outside candle, but you can see then you needed to be careful with the bounces because it went lower. Now this one also was a bearish engulfing, which often also means bounces may end up going lower. So I'm just saying, if it does bounce, without creating some sort of real bottom, you need, like if it bounces straight from here, you need to be careful because that could later go lower again. This is a crazy wicked area. 1, 2, 3, 4, 5. You could call that six wicks. There is we have broken down off that support. You can see it was holding. It closed below it. It faked out above, and now we have confirmed closing below this trend line. It's confirming. It's the first one tried to bounce, and when you close the second time below it, is confirming, and it's also closed below the previous candle. So we have confirmed now below that. So there is a concern that bounces here could be a short, right? So you just have to be careful. But anyway, let's look into it a bit further, a bit deeper, and see what we can find. Now, there is no certainties in the market. The market is a game of probabilities, and but when you get three tails like this, quite often there is more downside. Like a bounce here would like go lower, right? There's a wick in there. I'm just going to put there for a rough guesstimate for right now. But again, there's no certainties. Like if FTX came out and started giving everybody back their money or something, it would flood money into the market, and maybe this could pump. Like there's always the possibility that it could go higher. But when reading the charts, that's what it's saying. When you get three tails like this, often there is more downside at some point. So again, it's kind of backing up what we talked about in the last time frame, that bounces here you may need to be careful about because it could later go lower. That's a 9-week chart, by the way. This is a monthly chart. Yeah, so monthly bearish engulfing here as well. It actually looks a little bit like here, not quite, but I'm just saying it's kind of an upside down candle of that actually, but it closed into the bottom of that support. It's closing into the bottom of the support here. So hopefully we don't get a candle like this, right? I don't think anybody wants candles like that at this point, because the market has been, most altcoins have been very bad recently. The other thing is, as long as this is red on the month, you need to be careful. This is taking liquidity in this wick at the moment and trying to bounce, but as long as it's red, you got to be a little bit concerned, or concerned, careful is a better word. When things start flipping green, that's when you even here there was a large wick on this and it starts flipping green, then that's a sign of strength, right? As long as it's still red, you have to be extra careful. It's like here, right? When this was green, you can be bullish coming. This is a strong candle here, and you can be bullish coming into this. But as soon as this flips red again, you have to get out of your long trade, because that is negating the bullishness. The line in the sand for SOL is here. It needs to hold above there. If it doesn't hold above there, it's likely going to flush pretty hard. But above that, things are possibly okay. The frustrating thing, if you want to call it, we have already taken liquidity in this candle and dropped down and flipped red on a 6-month chart, right? So technically that's bearish. Technically, bounces can still be, shorts here, because the market is overall bearish when you're red on this larger time frame after rejecting, after creating lower highs and taking liquidity in this previous candle. There is multi-factor and also rejecting off this resistance. See this point here? That's a major resistance point on the chart. I know I'm making a mess drawing it there, but let's just, so you have that factor, you have the lower highs factor, right? So, and you're also obviously you're red on a 6-month. You've taken liquidity in the previous candle right in here. So you have multi-factor stating that SOL is still bearish. So you are looking at an 8-hour time frame to see if there can be some sort of upside. So, and that's okay. So I was just looking at the larger time frames, and 8-hour time frame. Yeah, personally I don't use the 8-hour time frame, but that's okay. It's okay to use it. I'm not saying it's bad. It's probably good, to look at extra time frames. So I'm definitely not knocking it. I like to look at lots of time frames. If I move this up here. You can see the time frames that I look at. So they're all in here. I suppose they're all in here. You can check in them, but my favorites, you can see the favorites are up here. But there is nothing wrong with the 8-hour time frame. I use the 12-hour time frame, but it's the same trend line here. It is trying to bounce up. Right now, it actually just flipped green on the day right there as I was just changing time frames. So it is trying. It is having a little bit of a bounce, and look, we did earlier. It was red. We did flipping red again. We did fill some of this wick actually, and now it's bounced up. So there is a slight bullishness to this now. So what it's suggesting is, well, SOL is trying to be bullish here, and it needs to hold above here, right? So I don't know what that drop is yet. What the risk on that is. It's a 2% risk to try and get long on SOL with a stop below here. Granted, as I mentioned, I don't like the overall setup. It's still attempting to be bearish, but there may be some near-term upside here. Like that's a major level. If we bounce up into that level, that is major. That's a major resistance point. We've rejected. It was support all through here, and then we broke through it again. Well, it's the first time we broke through it, but we broke through it many times, but it's closed below it this time. There's a little bit of similarity to here and here. You can see how it, that's a 4-hour chart, but it did chop about for a period before being able to run. Is the same thing going to happen? I'm not sure, but it does look like it's trying to retrace and bounce up. Like here, it was pretty choppy. It did bounce for a bit, and then it chopped about before running. If you're trying to get long on this, I would expect something similar, some sort of chop, and then run above here is an interesting point on the chart. You can see above the moving averages here. Didn't quite make it here, but in a bearish move, above the moving averages is a place to be watching for a potential profit area before rolling over again. If it's a successful move, it'll show strength and run from there. I'm sure we have plenty of examples of that. Like you can see here, you can see the first attempt rejected, but when you consolidate in around the moving averages, it allowed it then to break out, and when you break out, then you can run. We need to see if this move up gives us consolidation in here, right, for a potential, then it could break up and run a little bit like here, right? You get the move, you want to get that continuation into here, consolidate and move. You get, the first one did reject here above it, but you want to get this consolidation in here, and then you can run. So far, we're not at that point yet. As long as BTC is green on a 2-week candle, this has a chance of moving up and consolidating and having a move. if I was taking the trade, I would have a stop below today's lows, really, because if it starts breaking down below today's lows, it's a sign of it's a lack of strength, and you need to be careful. It's already broke down below the white 100, so it needs to kind of recapture that pretty quick if it's going to start moving. As you can see here on the weekly, it's doing the same. It's took a little bit of liquidity below, and it's trying to move up and flip. If this low starts to break, if the white line starts to break again, well, you get more concerned then, because that means it's probably rejected here somewhere and maybe breaking down. Okay, so you need to be careful with that. It's not the greatest trade ever, but if you're doing it, I would keep a fairly tight stop below there.